Okay, let's unpack this. We're diving straight into, well, probably the biggest question in crypto right now. When does this Bitcoin bull run actually run out of steam? And maybe more importantly, what are the objective signs? The non-emotional clues that we're near the top.
That's exactly it. And the sources we're looking at today, they deliberately ignore those wild price predictions. Instead, they focus on decoding the market's rhythm. They call it time and slope.
Time and slope, like finding an invisible clock behind the moves.
Precisely. It's about the underlying pattern. And, this approach, this model, it supposedly nailed the 2022 bottom.
Okay, so if it called the bottom, what's this invisible clock telling us now about the top? Where's the anchor point in history?
Well, the key technical marker is a pretty rare event. It's when the 200-week moving average, which is like the bedrock long-term support for Bitcoin, when that average starts to intersect with the price level of the last cycle's peak.
Huh. Why is that specific intersection so significant? Sounds kind of technical.
It is a bit, but historically the message is surprisingly simple. Every time that happens, it's basically whispered, the top is already in, or it's really close. It's like the market hits a structural ceiling. It runs out of room to keep climbing at that same speed.
Right, so it's about the cycle maturing, not just the price itself. You also mentioned slope. How does the speed of the climb fit in?
Yeah, the slope. So the trend starts gently, then it goes into that crazy acceleration phase, the parabolic bit everyone notices. The math in these sources suggests that acceleration hits its peak, its most critical point, around late autumn, just before winter really kicks in.
Late autumn. So that gives us a rough time window. Okay, what about the million-dollar question then? Price. We hear huge numbers, but you mentioned diminishing returns.
Exactly. Diminishing returns is key. It just means each bull run, while hitting a new high, the percentage gain is smaller than the last one. The explosion gets weaker over time.
So this cycle won't be as explosive percentage-wise as the last one.
That's what the models suggest, yeah. If you factor that in, the potential price targets become much more constrained. It's not infinite.
Okay, so we have a time window, late autumn, and a price idea that's high, but maybe not as high as some hope because of those diminishing returns. But how do we actually know when we're in that final moment? How do we spot the signs?
Right, it shifts from predicting the what to recognizing the how.
Okay.
The sources talk about three main clues for spotting this final phase, what they call the whispering window.
The whispering window. Okay, I like that. What's clue number one?
First one is classic, almost boring, but critical. Altcoins start bleeding even while Bitcoin looks strong or is still pushing highs.
Bleeding how? Like just dropping in price?
Yeah, or just going flat. Capital is rotating out of riskier alts and into Bitcoin for that final liquidity push. Bitcoin dominance spikes.
So Bitcoin looks strong, but it's actually a sign the overall market liquidity is drying up. Smart. Okay, clue two.
Clue two is a weird calm. Volatility compression. Things feel too good to be true.
Too easy. Like the price just keeps drifting up without big, scary drops.
Exactly. That calm lures in the last buyers right before the final shakeout. Low volatility feels safe, but in a bull market peak, it's actually unnatural.
So the lack of fear is the fear signal. Makes sense. And the third clue, does it tie back to the technicals?
It does. It ties back to those long-term moving averages, like the 200-week we mentioned. When price starts hitting certain levels relative to those long-term lines, levels unseen since the last cycle's peak euphoria, it confirms the structural maturity.
Got it. So altcoins lagging, a strange market calm, and hitting those key historical average points. That paints a clear picture of exhaustion.
Pretty much. And if you combine that with the timing, say you see leaves turning gold in New York, late autumn, and crypto Twitter is just wildly euphoric again, but your altcoins are struggling. That's probably the whispering window.
Wow. Okay, so synthesizing this, history and geometry suggest a rhythm. The final act isn't random, it's sort of baked into the structure. We should be watching for that structural heat.
Yeah, the main takeaway isn't guessing the exact price. It's about sensing the moment. The models are all kind of humming the same tune right now. Structural fatigue is coming. And remember, cycles often end quietly, disguised as a celebration, not always with a huge crash right away.
That's a really crucial point. Don't mistake the quiet for strength near the end. Which brings up a final thought for you, the listener. If these geometric models, Gann boxes, fib time curves, can map Bitcoin's rhythm based on time and slope, how well might that idea of market rhythm apply elsewhere? To other volatile, cyclical assets, could human psychology, fear, and greed have a predictable geometry regardless of whether it's crypto or commodities or tech stocks? Something to think about.